You just moved money into your checking account for your closing costs. You thought you were helping your loan, but instead you may have just frozen your escrow. You are under contract and the appraisal may have already been ordered. Your contingency deadlines, they're coming fast. And now the underwriter sees a large deposit and asks one question. Where did this money come from? If you cannot document it, the lender may not be able to use it for closing. And the worst part is that money may be real. That money may be yours, but without the right paper trail, it can still create a serious underwriting problem. Cathy Sabater, mortgage strategist and proud veteran. Today, we're going to discuss the large deposit trap. This is one of the fastest way buyers accidentally delay their own closing. Here's the problem. When you apply for a mortgage, the lender is not only checking whether you have enough money, but they must also verify where the money came from. That money must be sourced. It has to be documented and acceptable under loan guidelines. Buyers always ask, well, it's my money. Why does the lender care? Well, they care because they have to make sure that money is not borrowed. That's the key. It is not a cash advance. It is not an undisclosed loan. And it's not debt that you should have been counted against you. Because if that deposit is really borrowed money, it could change your whole approval. It could change your debt to income ratio. It could change your available funds, and it could change the underwriter's decision. Well, let's put this in 3 common traps. Okay? The first one is cash deposits. A buyer needs money for their closing costs, so they deposit cash into that account. Now, maybe that cash came from the home. Maybe that cash came from family. Maybe that cash came from selling something. And of course, the buyer's going to think, well, no big deal. It's my money. But to the underwriter, cash is difficult to source. There may be no clear paper trail showing where the money originated. If the lender cannot verify the source, that cash may not be allowed to count towards your closing costs. And now that can create a cash to close shortage. That is when the deal gets stressful. Let's talk about trap number 2, transferring money. So when you start transferring money from your accounts, your lender will review it. And this happens a lot of times. A buyer moves money from a savings account, an investment account, a retirement account, or another bank account. But that account was never reviewed by the lender. Now, the underwriter may need additional statements. Why? Because they have to verify the account owner of the account you're sending the money to and from. So They're going to review other deposits inside that account. One simple transfer turns into another document request. The problem is not the transfer itself. The problem is moving money without telling your lender first. Here goes trap number 3. This one surprises a lot of buyers. Gift and sale proceeds without documentation. Okay, a family member sends you money to help with closing, or the buyer sells a car, or they sell furniture, or they sell personal property, and that sounds simple in itself. But mortgage underwriting does not work casually. Gift funds usually need a specific process. The lender may need a gift letter. They may need proof the donor had the funds. They may need proof the money was transferred. And they may need confirmation that the money, and this is the key again, does not need to be paid back. Hence, it is not a gift. Okay? If money comes back from selling an asset, the lender may need a bill of sale, proof of ownership, and proof of deposit. So even when the money is perfectly legitimate, the documentation matters. This is why I tell buyers, do not move money blindly during escrow. Do not deposit cash without talking to me or your lender. Do not accept gift funds without instructions. Do not transfer large amounts from accounts your lender has not already reviewed. And most importantly, do not assume that because the money is yours, because the lender can automatically use it, because that may not be the case. That is how underwriting works. Now, let's get clear. This does not mean you can never move money. It just means you need to move the money correctly. If the money is coming from another bank account, just tell your lender. And before you transfer it, if the money is coming from a family gift, use the correct gift process. Now, if the money is coming from the sale of an asset, keep the documentation. If the money is coming from retirement, then you need to let us know and provide the full documentation, which means full paper trail. And most importantly, ask before you deposit. A 5-minute conversation before moving money can save you days of underwriting delays later. Here's the strategy. Before you go under contract, your lender should review your assets, not just the balance, the source. Where is your down payment coming from? Where are your closing costs coming from? Which accounts will be used? Are there any large deposits showing? Do we need updated bank statements? And do you need gift documentation? Do we also need to explain any transfers? That is the work that protects your escrow. Because by the time you are under contract, the worst thing you can do is surprise the underwriter. Mortgage approvals are not just built on surprises, right? They are built on documentation. So here is the takeaway. If you are buying a home, Do not move money during escrow without speaking to me or your lender first. Do not deposit cash. Do not accept gift funds without instructions. And do not transfer large amounts between accounts without the paper trail. Most importantly, do not assume that the lender can use your money just because it appears in your account. Your money needs to be verified, documented, and acceptable. A large deposit does not automatically hurt your loan, but an unexplained large deposit can freeze your escrow. And if the money cannot be sourced, it may not be usable for closing. So before you move money, just ask. Before you deposit cash, ask. Before you accept a gift, please ask. Before you sell an asset and deposit the money, just ask. That one step can protect your approval, your closing date, and your escrow deposit. I am Cathy Sabater, helping buyers protect their mortgage strategy before small mistakes become expensive problems. Data, not the hype.